Welcome back in to the Rock Pod, presented by the Royal Oak Chamber of Commerce. I am John Gay from Jagged Detroit Podcasts.
I am Andrea Arndt, an attorney at Dickinson Wright.
I'm Trish Caruth, third-generation jeweler and owner of Your Personal Jeweler.
I am Lisa Bibby, your local neighborhood realtor with Keller Williams Advantage.
Today we have with us Michael Pesendorfer from M3 Investment Services. Michael, it's great to have you with us. Tell us a little bit about yourself and your background.
John, it's great to be here, and I have a business here on Main Street near Catalpa, M3 Investment Services. We moved here 6.5 years ago. We spent the previous 12 years in Berkeley and 6 or so years before that in Southfield. In the 2 previous locations, we were really looking for a home. And we're so happy to say that, we found this space in Royal Oak, and it is our forever home. I've been in the financial services industry for 37 years, love what I do, consider myself a student of what I do. But more importantly, I'm excited about being a part of this community.
What was it about Royal Oak that really attracted you to the area?
I think a lot of things. I've been in other really nice locations in southeastern Michigan. I spent a few years in Rochester Hills. I lived in Grosse Pointe for a few years. I lived in Novi for 25. So I've had other nice communities to compare to, but in my mind, they don't compare to Royal Oak. I think the downtown area, the diversity is really a much more interesting and exciting place to live and to work. And so that's what attracted me to Royal Oak. And I have to tell you, there's not been a day where I've been disappointed in the 4 years I've lived here and the 6.5 years I've had my business here.
Great. Well, Michael, when did you first realize that you were not fit to work at a traditional giant firm and inspire you to start your own company?
Yeah, so I guess I've always kind of had my own ideas and my own thoughts and visions about where the future would go. And I was with a large firm out of school, and it was going well, actually. I performed well, and income was going well, and it looked like life was off to a great start until one day I went into my boss's office and was looking for direction and looking for more information and to get deeper, and it was unable to be provided for me. So it kind of the Peter principle had kind of reared its ugly head, and I decided it's time for me to strike out on my own and see if I can make this idea work.
I feel like, Michael, sometimes those larger investment firms, and not to cast aspersions, but sometimes they kind of have a formulaic cookie cutter way of doing things. So it makes sense that you would kind of want to go off on your own and apply your own base of knowledge, right?
So there's that. And the other thing, too, is as far as the services that we provide, it seems to come in layers based on income levels. So you might not be surprised to think that people at the higher income levels were getting maybe a more sophisticated, more personalized process. And what we found is that it's extremely rewarding to start with somebody that doesn't have much and grow with them on their journey over a long period of time and then watch them become financially independent. And so what we did is we looked to provide the same level of services, the same level of sophistication to working class professionals.
So is that your thought process in starting M3 Investment Services, or were there other things that you were considering?
That was really the driver. The other driver was to be totally independent, so completely product agnostic. I really don't have a relationship to a company where I sell their stuff. Much the same way if you called somebody and asked them to do work on your home and they came in with a toolbox and you didn't say, are you using Craftsman or Stanley because that's really important to my process. It's kind of along those lines. So we're really looking to meet with the person, find out what their needs are, their constitution is, and then design a program that is personalized to that person.
Michael, I work with several financial advisors and investment firms and doing podcasts for them. A trend that we're seeing in the industry is this fiduciary standard. To your point, sometimes folks who are affiliated with one of the larger firms, whether they're selling insurance in addition to financial services, they might have financial incentive, to your Craftsman tool analogy. They might have that financial incentive to recommend certain investments or certain insurance products.
Right.
But having the fiduciary standard means that you are obligated legally to act in the best interest of your clients. Do I have that right?
You do. We didn't need a law or a regulation to start that thought process.
I like that.
We've been at that 25 years. The other thing is really things have gone from a transaction compensation model, which is a commission to do something, which would be tantamount to you hiring somebody to paint your bathroom and give them all the money up front. I'm pretty sure your bathroom's never going to get finished. So you give somebody a commission and you invest money and they really have no obligation, or they're really not tied to the ultimate performance of that investment that they recommended for you. So really, it's a much more consumer-friendly business model to be on a fee-for-service. And that way, I want you to get to be a millionaire just as bad as you want to be a millionaire. And we're on the same side of the table.
So that fee for service, it's generally speaking a percentage of the amount of money you're investing, so that if the investor makes more money, they make more money, and then by the same percentage, it incentivizes you to make them more money, right?
Exactly. So every client is important today as they were, or more important than they were 10 years ago or 5 years ago or whenever they started. So, and actually, the great thing about doing this for 37 years, and I'm sure many of you are thinking, wow, he must have started at 8 or 9.
Oh, yeah.
If he's been in there 37 years. But but actually, the beauty of it is, and really the thing that gives me great comfort, is that I've actually kind of lived through these. Like, I watched it, and I have clients that have been with me for 30 years that have lived the whole dream. So it's really nice to know that it's not just a concept that somebody else wrote about. It actually works. And so it's extremely rewarding.
What are some other things that you enjoy about your job?
Well, Trish, it's important to me to have variety in life. It's important for me to have things that challenge me mentally, things that challenge me emotionally. And the securities business is fascinating from a lot of different perspectives. Number one, I learn about a lot of different businesses. It doesn't matter if it's the new EV trend for electric vehicles, or if it's, the technology that's coming along with farming, but there's so many things going on in the world. And when you're in the investment business, you get to sample a lot of things. And so it's never boring. The other thing, Trish, is that, when you sit across from somebody that you've been doing business with for 12 or 14 or 15 years, and they're really grateful for the relationship and they really lean on you and depend on you, that's pretty darn satisfying.
So I wanted to jump in there, Michael. You had mentioned investing in a lot of unique things that are coming up. Does your firm invest in cryptocurrencies?
Thanks for the question, Lisa, because that is the $64,000 question these days. And no, we don't directly invest in cryptos. However, there are ETFs and now there are funds that will be addressing the crypto and also the blockchain version of the crypto. So, but that's in its early stages, really early stages. And so we would still consider that to be speculative. And with our clientele, generally, we're not getting too far off into the speculative market.
I really like that, Michael, because the old investment adage of not to weight yourself too heavy in one particular sector, particularly something as volatile as cryptocurrency is right now. But to me, that's fascinating that some of these ETFs might include some blockchain or some cryptocurrency in the larger portfolio as part of more of a balanced strategy. I find that really interesting.
And the other thing about that, I think that's important too, is I had mentioned earlier about the variety of the subject matter that I get to sample, and I love that variety. But I also need to recognize when I'm in over my head on a particular subject matter and need to lean on the professionals that's what they do on a day-to-day basis. And crypto is one of those things that the landscape is changing so quickly that really for anyone that's not doing it day-to-day, you're probably playing with fire.
High risk, high reward. My husband invested $1,500 into one coin. We literally went to the farmer's market, or where did we go? I don't know. We went somewhere. We came home and that $1,500 had grown into $18,000 over the course of just a couple hours. I was like, pull that out now.
What was that coin?
But it was one, like not one of the main ones that you can get from like Coinbase and the other platforms. It was a new project that you have to like go on your computer and make like a separate wallet. I don't claim to know much about crypto. My husband's really into it and really into NFTs, but been doing good with it.
Well, Merry Christmas.
Yeah, we should have a whole other podcast just on that.
But again, there is an inherent risk there. If I were to speculate as to what Michael might say next, and that is, yeah, you can get really lucky. That can go up really quickly, but it can also plummet really quickly, or you can put too much into it, right?
Well, not only that, but on the other side of that trade, he sold it at 18, somebody bought it at 18, and now it's at 12. So there was a winner and a not so winner in that transaction there. So if you can afford to lose the money, then taking a shot at some extraordinary returns is not a horrible thing. But again, you got to be prepared to not do well.
But wouldn't you just hold on to it until it goes back up? Especially with most investments, you're looking long term, not short term.
So you would, and for certain people, we would include some of those ETFs or funds that are in crypto, or, we encourage people that have a really deep desire to get involved in it to go ahead and open up a crypto account. It's just from a management standpoint, a compliance standpoint. I mean, it's not regulated. It's not considered, to any large extent backed by any government. So really, it's just too early from an institutional standpoint and a retail outlet like this that deals with working class people. It's because everybody would get excited and want to hear a story like that or be involved in a story like that. The unfortunate problem is it's like the lottery. It's not everybody's having that story.
Yeah.
Or you have a story like me where I put a few thousand in. It went up to over 200,000, encouraged other people to join, and now it's down to like 30.
Well, maybe if you called Trisha's husband, he'd share some of the 18 with you.
Or at least tell me when to sell. Jeez.
There you go. There you go. You might settle for the advice.
Sell high.
Yeah, there you go. There you go. Many of the people, after we have the discussion about what the risk is, they end up changing their mind because people don't really have risk aversion as much as they have loss aversion. And so then that gets to be taken a little bit more seriously.
There's a psychology behind investing, and this is something that I've learned a lot about in recent years. And correct me if I'm wrong on this, Michael. It's something along the lines of it is a stronger feeling to lose $100 than it is to gain $200. Like the sense of loss hits you harder than the sense of joy, even if it's more money involved. Is that right?
It is right, John. As a matter of fact, generally speaking, when we engage a new client and we take a risk tolerance profile, that's a significant angle of a couple of the questions. That's directly impactful on people's decisions.
Well, and I think it's really important that most people starting out investing, they think, oh, I just got, $5,000. I want to start investing. How do you help guide people if they are at that position to, you have to make sure you've got a rainy day savings account, you've got medical expenses covered, how do you advise people when they're first starting out so that you can help get them to that $1 million, but they're also not investing every single dollar that they have?
You know what? Actually, I love that. And that's been a hallmark of M3 Investment Services because, we're going to talk about the basics and you build that pyramid based on having an adequate amount in your checking and your savings and making sure that you have all the insurances that you need. And then from a standpoint of investing, it's being able to have people understand the difference between investing and savings. So that when you're investing money, you should look at it as money that's out for the longer term, that if you needed an expensive repair on your car, that you didn't have to go to your investments to get the money to do it. You'd already have it in your savings or checking. And then start to kind of build a portfolio based on really participating in the growth of the economy, taking into consideration the person's station in life and what their goals and their dreams are, and then utilizing that information versus the backdrop of the economy and the opportunities that are available. And so, a lot of times, and as a matter of fact, today is one of those times, in fact, maybe more so than any time in my 37-year career, which is people should be in a lot of things, but some things are just not good to be in right now. And so, you just want to be in the right things at the right time, but you take a long view.
I think that is such a valuable tool that you're offering there at M3, Michael, about that whole 360-degree financial picture. It's not just investments. It's really making sure that somebody is financially stable and has an overall financial plan going forward. What do you feel are some of the biggest misconceptions that clients walk into your office with for the first time?
Well, I think the biggest conception probably is that I know what's going to happen tomorrow. The biggest misconception is that we're supposed to time the market or know when to get in and when to get out. And the reality of it is I don't know any more about that than any of you do. Mm-hmm. The thing about it is I know how to prepare for the volatility. I know fundamental tools to mitigate risk. And so we'll employ all of those standards. But the misconceptions are that we kind of can time the market and do that. And that's probably the single biggest thing.
To time the market, essentially you need lightning to strike twice. You got to know exactly when to get in and when exactly to get out. So unless you have Kreskin's crystal ball, it's really not happening.
Yeah, no, and I do the same thing at the grocery store. My line's moving slow and the line over next to me is moving fast. And then I get into that line and then sure as heck, the person in front of me needs a price check on aisle 6. And where I was in the other line now just blew through me. So I try not to do that same thing in the investment world.
What are some things that you wish were different about your industry?
Lisa, that's a very insightful question because you might find it surprising to know that only 13% of the population uses an advisor. You take a lot of different industries or products or services out there. There's a lot more people with cleaning ladies and lawn services and, attorneys. 13% is not a lot of people getting help. And typically in an area where they're not comfortable. We do almost zero financial literacy training in our high schools. And in college, you're either in those schools of business and finance or you're not. So there's a lot of people out there not comfortable with the subject matter. And so I wish we would be a little bit differently in how we do that. The other thing is there's still too many of the product pushers. There's still too many of the salespeople that are simply looking to have somebody write a check or roll over a 401k and for them to, make a big chunk and then be on their way to look for the next person. So I think that's really a bad reflection on our business. And I wish that was different.
So it sounds like there's a lack of education about investing in general. Is there anything that your company is doing specifically to help educate the masses so that they have a better understanding of investing and why they would want to hire someone like you to, invest their funds in?
That's always been a big challenge, is to tell that story. Over the years, we've done it in a lot of different ways. We used to do big seminars and meetings and have guest speakers and do all that. The challenge there, obviously the first challenge, even before all this COVID mess was, in Michigan, you could schedule a seminar and it could be, raining cats and dogs that day, or it could be 80 and sunny. And either way, your seminar is wrecked because people want to do something different or aren't going to leave the house. So there was that. And then we do a lot of direct mail and we do a lot of other things and we do some seminars. But I think now social media is becoming a bigger and bigger platform for me to be able to tell the story. So I attempt to do it in two different fashions, really. One is the website, which kind of is the more nuts and bolts of what we do and how we do what we do and what we're about on a professional level. And then M3 has a Facebook page, and that's really important to me because that's how we are as part of the community. That's how we are as individuals. I want to tell the personal side and the community side of the story on Facebook. So I've been using those in tandem to attempt to continue to drive the message.
That sounds like a really good plan. Can you walk us through your process of onboarding a new client?
Sure. The first thing is going to be simply a paper-free, form-free discussion about what's important to you. Some people want to die with their last check bouncing. Other people want to put their next generation or even the following generation on better footing to move forward. Some people want to see the world in retirement, and some people want to fill a bird feeder and sit on the porch for their retirement. So we really need to kind of get to know what you're about. And then the other thing is, what are the financial resources? You know, the one thing for a lot of people is behavior modification. I mean, if you're not doing things, then you have to make a change, and that change may involve your spending habits. It may involve your saving habits, and it may involve things that on one level you may want to change, but on another level you have a hard time letting go. So, you know, we're going to try to learn all that stuff, and then we're going to talk about, you know, what the relationship dynamics, what the expectations should be, and that everybody's on the same page, and then we move forward. After that, I think the most important thing is we have a system that we utilize here that does not allow for clients to fall through the cracks. So I keep a monthly tally, and at the end of last year, I think we have maybe 5,000 clients. At the end of last year, we had 24,000 contacts with clients. That means our advisors are talking to their people. They're telling them, hey, listen, we see what's going on and everything is fine. And if you need to make a change, I'll call you. So it's the service that matters. It's the investments will all work out. It's the service, and it's the taking care of, and it's the hand-holding and the explaining and all of that really helps people get comfortable with the process.
Michael, you alluded to this a little bit earlier. I want to come back to it, and that is your background, your history, the decades you've been in this industry. I know you've seen a lot. I mean, we can go back to Black Monday in 87. We can go back to the dot-com crash. We can go back to 2008. And, of course, COVID in the last 2 years. Wondering, you know, what perspective you have on the wild ride we've been on over the last 2 years and what you might say to an investor who's nervous right now.
Great question. Obviously, on the forefront of many people's minds. There's really kind of two ways to look at this. One is the secular transformation of the way things are done. The digitization, the enhancements of technology. I don't know if anybody of you saw this the other day, but John Deere came out with a tractor, a harvester, that is operated by the farmer's phone and runs 24 hours. So until this tractor came out, every day when the sun went down, the farmer got off his harvester or her harvester and went in for dinner and called it a night, and the work had to go again tomorrow. Maybe it rains tomorrow and you can't get out there, whatever. Now, just on the cell phone, operates the thing 24 hours a day in the dark and comes out the next day after wakes up and everything is taken care of. So this sweeping change of technology is transforming our way of life. Within those longer transformation period times, there will be cyclical bears or cyclical upsettedness in the market. The Fed has artificially maintained lower interest rates over the last 3 years, and I think rightly so. I mean, with the pandemic, with everything that had gone on, we probably did need to pump a lot of money into the economy. That will have consequences. We're beginning to see those consequences now in terms of proposed rate increases, in terms of a little less purchases on the balance sheet for the U.S. government. And so those are going to get people on edge and get investors on edge a little bit. I think we're on this precipice, on this edge here of, if the Fed does 3 or 4 rate hikes this year, which is what the Fed has proposed, then probably we end up the year with an okay year. If it turns out that they're a little further behind the curve than many economists or other prognosticators who are credible have said, it might be more like 7 or 8 interest rate increases. If that were to happen, I think things might get a little bit challenging in the upcoming months. But we're still a long-term bull, and we still believe in the transformation and the efficiency. I mean, we have this crazy thing going on right now where unemployment is at a low, under 4%, yet there are 1.2 or 1.9 million job openings in the country. We have nobody to fill them.
Yeah, very interesting time for sure. I should mention we are recording this on January 11th, so everything we're saying today is accurate as of January 11th.
So, Michael, what does your ideal client look like?
My ideal client looks like a person that wants to feather their nest and that's committed to themselves first and then the process. That's really the thing. We have 15 advisors here. So as far as somebody being matched with somebody that fits from an age standpoint, from a kind of overall perspective on the world standpoint, we're going to have somebody that's going to be able to take everybody. We just want people that want to have an advisor.
How many advisors did you say you have there, Michael?
15.
Okay, great.
I think you just hit the nail on the head, too, about talking about matching the client with the advisor, because there's so many different viewpoints and where they want to invest their money, and having that guide that has a lot of the same interests or thought processes, I think is very huge.
The thing about it is it's a relationship business. Mm-hmm. One of the things that is very rewarding, and one of you asked the question earlier about one of the benefits of the business is, a lot of these people over the long haul have become friends. I mean, we care about each other. If somebody's sick in the family or, whatever the case is, when we meet, the first 5-10 minutes of the discussion is about how is everybody? How are you? What's new and exciting? So when you have that match and you have that chemistry, because markets go up and markets go down. It's a long process. At times it can be challenging. But if you're sitting across from somebody that you trust and you think cares about you, then the rest will all work out.
So, Michael, it's been so great getting to know about your business. And on this show, we love to get to know you as an individual. So what do you like to do for fun outside of work?
So thank you for that question, Lisa. And there's a lot of stuff I'd like to talk about Royal Oak and the Chamber too, so if we get a chance. But on a personal level, I've had some life changes in the last 6-7 years. Those have put me in a position that I live here in Royal Oak. I have a lot to do in Royal Oak. I can be seen hoofing it around looking for a place to eat most nights. I spend a lot more time in the restaurants than I do in the grocery stores.
What's your favorite restaurant in Royal Oak?
My favorite restaurant in Royal Oak. Boy, I could be in trouble with that one, Lisa. I don't know. I don't know that I could alienate a couple people, but
where did you eat last night then?
So, well, you caught me on the one night the neighbors asked me over for dinner, but the night before I had dinner at Lily's. So I like Lily's and I like Tom's and I like Diamato's, and so I'm all over the place. When you eat out like 9 times or 10 times a week, you give everybody a chance.
Michael, you mentioned the Chamber a moment ago. What was it you wanted to say about the Royal Oak Chamber of Commerce?
To me, I'm very excited. This is my first year in the Chamber, and I was on the board for the first year. I think there's so much opportunity. I think there's so much more that can be talked about and done. I think there's I have a condo that I have for rent in downtown Royal Oak, and I met this fantastic realtor that I was able to hire and represent me there. And without the Chamber, I would have never met that person. So one of the things that I do when I need a service, I call the Chamber and I call one of the people that work there full time, and I say, give me names of somebody at the Chamber. And I don't think enough of that is done because, that provides us all with kind of a little protection in that, when you're referred to somebody, that's important and you want to take care of that person and you want to do more referrals. I also think that the city where it's at right now, coming out of COVID, is really fantastic, but I think there's so much upside, and I'd really love to see us, take this to places it has not been to yet.
Well, now it is time for our fishbowl question of the day, where we pull a totally random question for you. Andrea, can you pull our fishbowl question of the day?
Sure can. All right. Let's pick a good one. Okay, here we go. What is the coolest sound that you've ever heard?
While you think about that, Michael, I'll just mention that Lisa is finally done blushing after you talked about what a great realtor you had. So we should clarify, since it's not video, that he was talking about Lisa indeed there.
I was absolutely talking about Lisa Bibby, and her enthusiasm for what she does and her professionalism are impressive, and I'm very happy. So that's good. And I will be doing everything I can to introduce her to anybody that I know that's looking for a place in the neighborhood. That's for sure.
Well, I definitely appreciate it. I put my heart and soul into my business, and I thank you for choosing me to help guide you through this process.
You're welcome.
All right, Michael, back to our fishbowl question. The coolest sound you have ever heard?
You know what? I think I like the steel drums.
That's awesome.
I think it's the steel drums, because if it's the steel drums, then my mind is immediately going to bare feet, sand, a beverage, shorts, and the good music.
Sounds like the perfect vacation. Or future retirement.
Michael, have you ever heard of a Drume hand drum?
No, I have not.
Kind of like a steel drum, but a much more pleasant sound. If you like the steel drum, you'd probably love this. I'll send you a link to a really good artist who plays these.
And maybe we'll also put it in the notes for the show.
So if anyone is looking to put some more feathers in their nest, you can reach out to Michael at M3 Investment Services. Michael, what are some of the best ways that they can reach you?
So m3advisor.com, 248-543-3400. Or when you're at Crispelli's and you get done getting your bread, stop over. We're right across the street.
Awesome. My name is Lisa Bibby. I am a realtor with Keller Williams Advantage. I put the real back in realtor. Looking to buy or sell your home, purchase an investment property, or even start an Airbnb? You can find me on Facebook, YouTube, and Instagram at Sold by Lisa B.
And I'm Trish Caruth, third-generation jeweler and owner of Your Personal Jeweler. I specialize in creating custom engagement, wedding rings, and fine jewelry. You can find me on Instagram and Facebook at The Personal Jeweler, or on our website, www.thepersonaljeweler.com.
My name is Andrea Arndt. I am an intellectual property attorney at Dickinson Wright, and I help my clients protect their inventions and build their brands. You can find me on LinkedIn and on our firm's website, www.dickinsonwright.com.
And I am John Gay from Jagged Detroit Podcasts. Nobody knows your story better than you, and I believe we can help you tell it. For anything related to a podcast, whether it's a consult, an edit, or recording the podcast with you, that's what I do. You can find me at jagindetroit.com or on any social media platform at jagindetroit. That'll do it for this episode of The Rock Pod, presented by the Royal Oak Chamber of Commerce. You can find out more at royaloakchamber.com. And you can also follow this podcast on Apple, Spotify, or wherever you're listening right now. Thanks, everyone.